So today is Friday, November 1st. I'm going over a review of my RSI reversal trades. I'm going to keep this in the secondary monitor, but this is the one that I am reading off of. So starting with September 18th, and again today is Friday, November 1st. So going back to September 18th, this is based on the watch list scanner based on RSI reversal. So you can see the RSI was peaking here. Confirm that with the Williams, which is a much faster moving oscillator. And you can see it hit a high of 63.96. Now I wouldn't have known that was going to be the high. I just knew that this was getting severely overbought. RSI went in the red, so I went bearish. Sold a short call. That was it, just a naked short call. And then it went down, 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 down. RSI is not going to give you as quick as of a signal, but the Williams will. And that showed oversold, so that's when I got out. If you stayed in, you sold that short call, then you would have lost money as it went back up. But this could have worked if you did a call credit spread. So you sold the short call at the money, kept the long call further out of the money. You got a net credit because the short call you sold was at the money and worth more. So this went down, 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 down. You took off the short call around here. That allows you to have the long call remain, which you fully paid for by the credit that you took in by selling that short call, and that goes back up, 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 up. So you would have taken it off when you saw that Williams was starting to go back up, which was around here, and that would have given you a close price of approximately 53.26. You see how it's starting to cross over here, so you're getting into 53s, and then when you ride it back up here, it's peaking, and when it starts to cross back down, that's when you get out. So you'd have a close price about 57. If you got greedy, you could have stayed in until it hit a high, but that's not the objective. We're going for probabilities, not anomalies. So let's go to wing next stop, wing stop. So that showed me an RSI reversal probability of September 18th. So September 18th is right around here, and you can see that it was oversold. Oversold meaning RSI went below the 30 line, and what I did was did a short put, sold a short put. Prefer to sell options rather than buy. If you were doubly bullish, then you could have done a caller and sold a short put and bought a slightly out of the money call. That would have been, the call would have been financed by the sale of the short put. So you would have kept both on, and that's risky because it's very directional. A smarter move would be to do a put spread or even a call credit spread, but I'd recommend a put credit spread because as Wingstop starts to rebound slightly, then you take off that short put. And implied volatility is going up and up and up, and then plummets right when earnings happen. So that is when you take off your short put, if you could. But Wingstop has been roughly, in the crapper. But if you got in when the RSI reversal was first giving an indication around the 18th, I got in the 18th because I got the indication on the 17th that the RSI had crossed over here. So we're talking about on the 18th, let's say the it's a kind of range of $1.53. It opened at $86.40, closed at $86.95. So let's say on the 18th we got in around, I don't know, $85. All right, so looking at Williams, it's a faster oscillator. We get out here when it's starting to cross back over, and that would be a $3 gain, so it would have been profitable. If we were just selling that short put, implied volatility was increasing, so that would offset some of the gains we're getting by the drop in the underlying, by the delta getting further out of the money for that short put, but still would have been profitable. All right, so that was a decent call. No pun intended with the call. TXT. So again, we got a reading that the RSI was overbought around here. So we did a short call. As you can see here on my tracker, September 18th I got in because on the 17th I got the notification. I assumed that RSI was going bearish, and here are my notes. Do a spread rather than just be directional and assume that I can guess the direction. But this is giving me the best guess of direction that I have ever had by going with RSI reversals. So TXT, September 18th, I got in after the notification on my RSI reversal watch list, and it looks like that coincided right after the absolute high. You can see here Textron made a fall from September 17th at a high of 52.87, which we're never going to go by the absolute high or low because that's impossible to base on that. But let's just say close price September 18th, 52.29, and then we're going down, 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 watching for when the Williams goes down and then starts to rebound. And then let's say we close around here or here, so we're looking at a close of about 46 to 47. So again, we look to open the entry at the RSI, we close using the Williams. Open at the RSI, close using the Williams. So open at 52.40, close at the Williams. And that was a good trade. Next one, STMP, stamps.com, STMP. So we have September 18th, and we have an oversold RSI. Now this one didn't go so well, a little bit tricky. It showed overbought, I don't know if I said oversold, but overbought RSI around the 17th or 18th. So we had a close price about $73.84, and then we just hold it until Williams goes down and starts to rebound. So it went down to 70, so slight profit, did a short call, and that went okay. But if we would have stayed in, we would have gotten screwed because it went up all the way to 94. So it's important you get out before then. They have earnings coming up. As you can see, earnings are coming up on November 7th. Sam Adams. So Sam Adams, again, September 18th. This is when we really went in. It was the first big test of this RSI reversal strategy. So September 18th, RSI was oversold, so that was our open indication. Went in with a short put. You can see that huge drop they had that day. Went with a short put, and we're looking at a close price around 358 on that day. Then we start watching the Williams to see when it peaks and starts to go back down. That was around here. So from 358 to 374 was a fantastic profit, short put. If you want to do weeklies, you can just roll it out, but you're looking at a date range of October 7th, from September 18th to October 7th. So weeklies, you'd have to roll it once or twice. If you did September 18th to October 7th, so we got 1 week. So obviously, if you sell that weekly, you're rolling it. You roll it again here on Friday, and you have the expiration here, but you take it off on the October 7th, right when it starts to reverse. So selling weeklies is a good idea on that one. You can adjust up and out if you need to, but you're making money every week, and you're finally buying it to close right when that Williams starts to go down. So you gotta keep an eye on your positions. You can't have too many positions. All right. Pergo. So September 18th, we got a reading that it was overbought. So we on 17th it was overbought. So on the 18th we went in with a short call. And on the 18th it was around $55, let's say. It's fair enough, $55. Then we start watching the Williams. that goes down to here, starts to rebound. When it does, $53, so that would have won. And that was, the September 18th to the 26th. So 18th, so we sold that weekly, we rolled it once, and then closed it out on the 26th. MKSI, another RSI reversal trade. MKSI, so same date. These are all pretty much the same date. Got the reading on September 17th. So it was a slight RSI overbought, not much, but same thing. Got in, close was at $93. Followed it down to the Williams, and that we wouldn't have known it was going to go lower after September 27th. So what we did was the usual. September 27th is when it crossed back above the Williams, and we closed it at 90.95. So we're going roughly 92 to 90.95. Another winner. LW September 18th. Now this was not overbought enough. We like it to be way up above or way below. This was just barely red, so this wasn't a particularly good idea to get into this trade. It was just something to illustrate the principle, and I wanted to learn, so I learned, got what I wanted. Didn't lose, but wasn't worth it. So September 18th, you can see that the RSI barely crossed above the 70. We want to get it at least 75, like it's deeper, like over here. This would have been a better trade if we were smart, but we are not smart always, sometimes, ever. So RSI red, see how it peaked, started to go down here. This is ideal. This is the setup we want. 77.77 was the close price. So let's say we get in between 76, 77, and then we're watching the Williams. So remember, $77 on October 4th. Follow it down. It's starting to go back up. October 23rd, and it's at 74. So that's a much better success. Nevertheless, we didn't lose money. We just kept it a short amount of time. I mean, the Williams was way up, but all we did was ride it from 74 to approximately 72. So still a winner, but not as much of a winner as we want. So what happens is I have this watch list that shows in order of RSI, the highest RSI down to the lowest. So some of these trades I made were decreasing with the amount of overbought or oversold. So they had less robust indicators. Again, September 17th, it was peaking. It crossed, over the RSI on September 17th. So we figured it's making a bearish turn downwards. So we got in here, and then we rode it till the Williams went down and up. So that was a short hold. If we would have gambled and held it longer, it would have gone further down. Again, that's a gamble. And it could have done what stamps.com did. It barely kissed it and then just went back up. So keep in mind, if you want to hold it longer, it's not always going to work. So on September 18th, we got a close at 131.71, and then we held it until Williams went back over around September 23rd. So that was 128.93. All right. Next, CPRT. So CPRT, September 18th, and we have a close price 82.57. So then we're watching Williams down. Here's when it crosses, makes another big move down, but we wouldn't have known that, so we take it off here. So from September 18th, when it crosses over, we're looking at 82.57 to 77.43. That's a good one. And let's see if we can use a drawing. No, we don't like that. CPRT, I'll do it one more time. So we had a overbought instance with CPRT around September 18th, right around here, and that was a close of around $83. Wrote it down to when the Williams went back over, and that was $80. BRC, September 18th, got in. You can see overbought, crossed over around $55.50. And when we exited that short call, it was at 51.47. So nice. And of course, you see what happens if you stayed in. But doing that call credit spread, you could get rid of that short call, keep the long one. As long as you're selling at least 3 months out, I'd recommend, so you have time for it to make that reversal. BRC, we got let's look at a few more. So Alta, now this was a tricky one. Alta, on approximately the 23rd of September, we had our indication that it had crossed over the RSI. Obviously you would have gotten an indication here, but you also got one here. September 23rd, this was on Monday. So what happened was Alta was giving a conflicting reading. RSI was oversold, but the Williams was pretty much overbought. And this was a tricky one, but it would have been a lot better if we just went with consistent readings on the RSI and Williams, because this wasn't very clear, and you can see the stock was all over the place. So Alta wasn't one of our good trades. We got in on our 23rd at 6:01, and since the Williams ended up peaking up here, then going down, and this was a short put because we're going by the RSI at first. Once Williams went back down, the range was at 14.56. Sorry, the close was at 257.43 versus when we went in around the 23rd, it was 237. So, we would have been profitable, and then went back down. But just to recap, you went in around the 23rd, close of 237.31. You followed Williams. It would have. You're looking for an oversold to overbought reading, and it would have messed you up. This was a bad trade because we didn't have consistency between RSI and Williams. So don't trade that when you have that set up. STT, so over here, September 23rd, STT is showing overbought, all right, around here. So the next day we got the reading was on the 20th or 23rd. So we sold a short call, and we sold around 60 at the $60 mark for the underline. Then when Williams went down, we got its first reading that was going up at 59. If we would have stayed in, because RSI still looked relatively overbought, so if you wanted to take that gamble that RSI still had more to go, then you stayed in, and you got out here at 55.78. So got out at 55.78, got in at 60. That's profitable. Let's look at a few more. So ACAD around September 23rd was giving us a reading that RSI had dropped down, consistent with the Williams. So we're looking around here, 20th to 23rd, close price of $41.68, and we're following Williams back until it goes up. So from $48.68 to $37.40, we have a winner. BAND, around the 23rd, oversold. See consistency between RSI and Williams, so it's oversold. and we are selling puts because we think it's going to go back up. But this was a bad trade. We should have had the Williams far more oversold, and BAND still has not come up, so this was a bad trade. We took off. We just did a short put on that one, and it's just lost us money on that one. So that would have been better off as put credit spread. So at least you would have made money on that long put. And as it continues to give you some false starts, like right here, that's when you would have taken off that long put. But it's still going down, down, down. So that was a loser. LOPE, LOPE. So we're looking around the 23rd. And this was a bad one because the RSI was not oversold until around here, and it's just been fading since then. So these were bad readings. It's just gone down and down, and you can see it's got that bearish Ichimoku. GH. So GH around September 23rd. Oversold, and it kept getting lower and lower and lower. But see, this is why it's a bad reading, because I was looking at it as it was going over. It was already almost oversold, then it went completely oversold. This is when you want to get in, when it's making that reversal up, when it's crossing over that line. So here's the mistake I was making. And if I would have gotten in here instead of September 23rd, if I could have gotten October 3rd when it was crossing over the RSI, I would have. So the underline was at 62.24, and then stay in till it's crossing back over. That RSI is Williams is crossing back over, and it's at 67.76. So that was a much better idea. I got to be careful of that. You need to watch when it's crossing over the RSI. Like LEN, October 10th is when I got in. So that was around here, and it looked like it was going to go below that RSI. It did slightly, but it has rebounded. So it since then has gone sharply downward, and that's when you would have gotten out. So you would have gotten a nice little profit from approximately 61.81 down to 59.47. All right, DocuSign. October 11th. So we see that it's crossing over the RSI around October 11th. This was a good trade. So it closed about 67.09, and then down here closed at 62.83. So that one worked. INSP, that's October 14th. So we have oversold reading, oversold. We're getting in around here. That closed then around 52.75. We did a short put, and here it is, up and up and up. So INSP was a good one. ASML, October 16th. We have overbought. We got in here. It's been kind of hovering and going up from there. So what we would have liked is something that's a lot more overbought, like around here. But ASML is still in the up and up. It's got a bullish Ichimoku, very low implied volatility. So that was not a winner. FRC, bullish Ichimoku. October 16th is right around when we got that reading. FRC crossed below, but see, this is one where Williams was not crossing, just RSI. So Williams was not crossing. It's not good. This would have been a better entry, even though it has since rebounded. Market's on a tear, waiting for it to go bearish again. Then Nike. So let's look at Nike as contrast. October 21st. Yes, both Williams and RSI on the way down. That's what we need. So we got in around the 21st, 22nd. Close price then was $96.22. And Williams has not rebounded yet, but it went from 96 down to 89. That's a winner. Pizza, probably don't. Now we're going to real recent ones. Real recent. October 27th to 29th, around that range. So we got the reading around the 29th to 30th. And the close price is 59.02. Now it's at 58. So yeah, that would have been a winner. But so before I wrap this up, let's take a look at my current watch list and what it's telling me. So here is the watch list, and I'm going to go to RSI, Nick RSI reversal. So here's Nick RSI reversal, and what we want, let me pause this. Alright, so now I have the columns that I want. I'm going to sort it by RSI. So INCY is saying that it's very overbought. So let's take a look at INCY. INCY overbought. So we have RSI. It's showing stochastic. We don't want that. We want a different one. Let's pause this. All right, so here's back the study that we like, the format. So INCY, it's overbought. That Ichimoku just turned bullish, but it's significantly overbought. Apply volatility is low though, be careful about that one. So what we're going to do is sell just slightly, we're going to sell the in the money call and buy the out of the money call for a credit. So if you stand by, I'm going to bring that one up. Alright, so I got the options table brought up for INCY. I'm going to go to the December expirations, and what I'm going to do is sell the call slightly in the money. Now keep in mind it is down today. That's because it's entering that RSI crossover. So we're going to sell at 82.50, and we're going to buy at 85. And we'll open that trade. We're going to ask for a little bit of optimism there. 1.31. Best GTC. And we've sent that order. That's waiting. And the next one down is INTC. That's Intel Corp. They're flying high. They do have a very bullish Ichimoku. RSI is overbought, but not. RSI is not overbought enough. Williams is overbought, but that RSI, we like it to be more on top. I mean, you see what happened last time. It was a similar setup. It peaked around here, fell moderately, pretty close to the same setup. Implied volatility was low. So, all right, we'll put in INTC. We'll put it in for a weekly, November 8th. And what we're going to do is sell the 56 and buy. Actually, that's not enough time though. We need to at least go out to December, so it has time to come back around, because we're going to do a credit spread. So we're going to sell for the calls. We can get $246 if we sell the 55. So let's go ahead and sell that one, and then we're going to buy the 57.5 for $1.16, or we could buy the 60 for $42. So let's go ahead and buy that one, $43. We're going to sell INTC, the 55 call we're selling and the 60 call we're buying. And we're going to just bump it up a little bit for what we're asking, $206.70, and that is routed. All right, it's good that these are all pretty cheap stocks. You know, if I was doing this with Amazon again, I would have blown up my account. VRSK. So let's go to the December expirations. VRSK is looking quite oversold, but the Williams has not come back up on that one yet. Ichimoku is looking very bullish, or bearish, very bearish. So I want something that is reversing on the Williams. Let's look here. That one's on its way back up, it looks like. Baxter, BAXTER, had a big drop after earnings, so let's give that one a try. BAXTER, you can see the RSI has started to come back up. Williams has not yet come up. So Edison International, they've had a big move back up. They crossed over. I'm going to have to pause this.